Hello, everybody, and welcome to a Sunday evening version of the Plus3 Stock and Commodity Forecast Show. My name is Ben Maldonado, and if I sound a little excited, I am excited. Not because it's Father's Day, but because the markets are moving. We had things kick up last week in a big way. Barry Hederaki's here again, as usual. Barry, I know you're chomping at the bit to talk about some markets. It was quite a week last week.
Yeah, well, at least the latter part of it. And so we're looking forward to at least a week filled with movement, hopefully.
Yeah, I mean, you and I have been talking about it. God, come on, just start moving. And it looks like, as you said, the latter part of the week, as some of the cycles that we follow hit, things started moving, and this sideways logjam in a lot of markets has been broken. So,
right.
Let's kick it off with the proxy for risk, the highest beta asset there is, Bitcoin. You and I have been talking about Bitcoin for a while on this show, in particular, this 42,000 level. Bitcoin did an interesting move last week, broke up out of the triangle. I saw on Twitter and FinTwit, everybody was bullish. Oh, it's going back to 50. It's going to 60. We're going to make new highs. And you and I just kept looking at it every day and going, we're not going to get excited until it settles above this level. And right. we couldn't even get to the level.
And the break looks more and more like a little, well, it was a false break. So,
yep, it was a false break. And now we're back into the triangle. The weight of the evidence still supports lower prices coming here. It's just, how are they going to do the break? How are they going to try and confuse the most people? This is an example of that. This false break up here, breaking out of the triangle, getting everybody all bulled up, and then boom, 4 or 5 straight down days. So as far as Bitcoin goes, it's still looking weak. If you're long, it's high risk at this point. If you're looking for entries, I would say, the levels we've talked about over the last few weeks, down here, first support's down in the 24,000 range. And then next support is about 15,000. So,
and where's that 50% line? What's the value there?
Up here?
Yeah.
Yeah, we're looking at about, 32,900, 33,000.
Okay.
So we almost hit it over the weekend. A little bit of a bounce here, but just when you watch the markets, you can see and feel sort of, and this thing feels heavy. It feels like it needs to probe lower. We'll see. We trade what price tells us. If it gets up here and can get above this level, this 41,800, 42,000 area, then you can get back on the bull train. But until then, odds favor lower.
Right.
So let me kick it over to you, go through your top 5, and then we'll come back to me and I'll highlight some markets that, based on the movement last week, look very interesting and ones we want to focus on this week. So what you got for us, Barry?
Well, we're starting out with the S&P. Basically, I'll just pick up where we left off last week. Well, if you remember last week, we've had these lines drawn in for weeks and weeks, and if not months. And we were really looking at this lower trend line and the upper trend line squeezing in, and for the lower trend line to hold, if not at the least for this 50% of the square to hold, which is around 4204, 4205, right in there. And at a minimum, this 4190 area, right? But this 42 was a critical level to hold in order to keep the bullish momentum going. And all this sideways sloppy action really killed the momentum, and the patterns really start to get weak. And we, Thursday going into Friday, we got stuck below 42. And so now we're not really interested in long side, to put it short. And a couple of things happened, just to sum it up, if for people not following us weekly. We had a lot of cycle timing windows or cycles expiring right around the high here. We also had some expiring over here in early May. And when the cycle expires, it doesn't necessarily have to crash. It could consolidate. There's lots of ways price action will adapt to that, the new cycle. And here what happened was, we corrected a couple of days, 3 days, and then we just tried to grind away, try to get up to a high, did a false break, and we had other timing, second set of cycles expire up here, and markets turned down. So since we're watching the levels and we're watching the price and time, now we have to look at the short side, and until price gets above 42, say 42.05, somewhere 42.04, right in that area, the markets are going to be soft. So, and I think that's a good way to sum it up for now.
I think that was a perfect description of, one of the pillars of our methodology, which is, price guides us. The timing cycles, when they come in and important price levels get violated, you have to pay attention.
Exactly.
And I remember last week we were discussing this 4,200, 4,205 level is key. If we stay above it, we can rocket higher. If we get caught below, given the cycles that we're hitting at that time, you have to take it seriously.
Right. And that's pretty much what happened Thursday. We kind of broke below and really couldn't get above. And Friday, we just sort of slid back below it again. And that's the price action we're looking for. And now it's on the weak side for now. And we'll just watch it for the short side and see how it turns out.
Yeah, looking for short side setups, basically.
Yeah, actually, I wanted to show you, we talked about the weekly chart last couple of 2-3 weeks, and we really focused on this really steep trend line and talking about how that cannot be held, and eventually that's going to break. And when it breaks, there's a high probability that market's going to unwind a bit, and so we just broke it last week. So heads up, everybody. That's all I want to say about that. We broke the line and we took off the level. So let's see how it goes.
Weight of evidence is to the downside now.
Clearly. Yep. All right, let's go on to the bonds. We've been talking about bonds last few weeks, and we have this purple line drawn in around 59, a little bit above 59, 59.04. And we've been bullish because the lows held, and this, we held along this 144 square line, and we were wondering how it's gonna, if it's gonna break through, or we're just gonna continue to consolidate within these boundaries. And again, last week we broke through. We did an early test the week before, and then now we're up and above. So 59.04, this level becomes support for now, and long as we're above this, you have to be bullish, and that's the technical outlook. We have a nice trend line set up and a little ABC for a possible target. Not a big one, but it's a target nonetheless. Want to add anything to that, Ben? Well, we hit the ABC there.
Yep, that's nice. The only thing I'd add is that, even if you don't trade bonds, knowing what probabilities favor bonds are going to do is very important, because interest rates have a dramatic effect on other markets, whether it's carrying costs of commodities or the rate at which analysts discount earnings for stocks. It all filters into the other markets. So we watch bonds closely, not only for trades, but we want to see, what's happening with these intermarket flows, right? Is money going into bonds? If it's going into bonds, where is it coming out of to fund bonds? Is it coming out of cash? Is it coming out of stocks? Is it coming out of commodities? These are all important questions when you're looking at the big picture and where money is going, because you want to get in front of the place money is going, and you want to step aside from the areas where money's leaving.
Right. So after about a 3-month holiday, looks like bonds are starting to move. And on the upside, we have around 164 and a half being an upside target. And we're looking for the market to hold above 159 in order to keep the bullish theme alive, I guess would be a good way to look at it.
I mean, as long as it does, it's bullish.
Mm-hmm. Just wanted to take a quick look at the weekly, and this is a 52-week square for the weekly, which all matches up. And let's see, what was I going to look at? Well, the fact that we got above the 52, the square of 52. So we came down, went below a quarter of a square into the square below. Mm-hmm. And the other thing was we were down 52 weeks, more or less, right? 53 weeks, 52 weeks, that's good enough. But in time cycle wise, 52 week leg, there's a high probability that it terminates at the 52 if we're trending in that direction. So we trended down for 52 and found support. So I think it just lends to the fact that we could have a decent low in place, and now we're just going to watch the prices to support that. Okay.
Yep. Looks good on bonds.
Mm-hmm. And take a quick look at gold. And I'm trying to think where we left off last week, but let's just pick up. Well, we've been bullish on gold since these lows came in, and I think the level we've been talking about is around 1857, 1855 is half square to hold if gold was very bullish. And we also had a trend line drawn in, and the square gave it up last week. So, this is a much deeper correction than if we were in a bull market. So the bull market scenario on a weekly or monthly time frame might be fine, but on the daily basis, now we're just back in the slosh. So we have to wait to see how we find support on this.
Yeah, and I've got a couple. I'm going to go over gold too and some of the charts to show the view that I think on this thing too.
Okay, great. Let me find my weekly gold. So here's a weekly gold. Well, here the interesting thing is we did 104, 2 squares of 52 up. Okay, so that's usually a termination point. So basically, we scored out 104 by 104. So it's basically 2-year square. And once you do that, you'd expect it to correct. We did correct down, and I would say as long as we're above this first square, which is about 1580, in the big picture, gold is in a good place. And ideally, it would be great if we can hold above this where we put the low in around 1680. Mm-hmm. So we'll see. Those are the levels we're watching for support.
What else is interesting on your chart there, Barry? If you look, there's a 52 in time from that high coming up in, it looks like early August, late July.
Over here.
Yeah,
August, early August.
That fits with some other cycles we have. So it's possible we could slosh around or make a low in that time frame.
Yeah, and that would look something like this. So the first drop did catch the 52. So that was one of the things we were looking at, and now we're pulling back. And if it's really strong, we'd hold somewhere in this area. And
absolutely. Yep.
So we'll see how that goes. So gold is basically holding for now.
They're shaking the trees, as I like to say.
Yeah, they're shaking the trees for sure. Let's take a look at crude. We've been bullish. We were waiting for this entire consolidation to break. We broke it a couple of weeks ago. few weeks ago, and our target up here was, we had one of the targets was the ABC around 70, and then we also had 73, 74, and if we were going to do the full square, up on the 78, 79 would be the other upper end of it, and so far the price action's okay. It's bullish. I don't see any big problems here, other than we did meet some targets, but the pullbacks have been very shallow. They're normal for this leg up from last April. So I think it continues to be bullish. So we'll watch it closely.
It's also another asset that's being bought on dips. You can see it with the big money. Anytime there's weakness, it gets bought up. It gets bought up.
So I would say the next big jump crude would have to make it to about 74. And I think if we get about 74 in the big picture, it'll stabilize and it could probably reach higher. Okay.
Yeah, I like crude.
There we are. So crude is doing okay. It's following through, same. And on the weekly, a much slower chart, but it's still holding the trend. Is our main trend line that we're watching.
It's a nice one by one, isn't it?
Yeah, it's a very nice trend, very healthy looking. And the pullbacks, the consolidation have been very healthy looking. And on the weekly, the key area for pullbacks to hold would be around 68. So that's all we have for that. It's moving, so not much to add. Dollar, also, we've been looking at this support level. We came back to half the square, and I think we had another square earlier, but either way, we had support here the last few weeks. We've been talking about this and looking for dollar to make a run up. I think we drew in this trend line last week, and accordingly, it's moving higher. So I think we could, the potential target being, 93.30 up here. And I wouldn't be surprised if we take it out. But how currencies move, so it might not go straight up like Bitcoin. So it might consolidate and do its thing. But the key thing to watch is its lower trend line and the 93.30 being the target up above. And take a quick look. Do I have a weekly up here? No, I don't. So
yeah, the dollar even more so than bonds. It all markets key off the dollar.
Mm-hmm.
And how many people were talking about at the beginning of the year that the dollar's going to zero, it's going to lose its reserve currency status. There were record shorts in dollars, and look what's happened. And the dollar's basically been going sideways to up this whole year.
Exactly. And so that's the square we've been watching. We're watching how support came in along that half square. Mm-hmm. So again, the target's up above here. And so that's okay. That's moving. So that's something.
I mean, longer term, I do think the dollar's in trouble, from a fundamental standpoint. Mm-hmm. You just can't print trillions of them and not have it affect the price. But right now, I mean, the dollar's bullish.
Yes. And it's showing up on the euro. You can see now euro, we've been watching these levels as we went higher. And I think last week we talked about this 2142 being the key level to watch if the markets were, in a strong footing. So we gave that up and broke the trend line, gave it up. And so this is the inverse of the dollar. So we're selling off. And it could have more to go, clearly. Right? If you take a look at 72, we're down to, around 1550. Mm-hmm. And going off the high. Yeah, pretty much the same area. So euro to the downside and resistance way up here. So I don't think I'm expecting that to come and test it just yet. But another level to watch would be the half square, which would be 120.65. So 2065 would be resistance, and also 2142 42 above that. And let me look at the weekly really quick. And so
You know,
here's
in this phase we're in right now, Barry, the stock
Mhm.
market does not like a strong dollar.
Right, exactly. So we've been talking about that quite a bit to see how
Yeah.
that's going to play out.
Right.
So here on, speaking of targets and support levels, this is a key area on the weekly chart, okay, not the daily. So on the weekly, you can see this fork line, and the 8 on the square of 90 have played out pretty well. And so according to that, support coming in around 1735, right in this zone here is what we're looking for. And if the market is weak, we take out this low that tested the fork before we went higher. And then I would say, you was really in trouble then.
Mm-hmm.
Right. So that's the area to watch. It's around 1720, 1730, this zone here.
And again, by proxy, if the euro is in trouble, meaning the dollar's strong, it's going to be
Yes.
hard for risk assets to make any headway upwards, and they may get pounded too.
Yes. So it's things might just couple up like that. So we have to watch it closely.
Mm-hmm.
That's all I have. Let me put it back to you to check the commodities and everything else.
Okay.
Hold on. All right, there we go.
Okay, excellent. So here you can see my chart. This is my daily chart of the ES, which is the S&P 500 futures. Barry covered that pretty extensively. I just wanted to show a couple levels to watch important levels and then possible targets. This is basically 4105, call it 4100. If we lose that support, that is a major loss from a daily standpoint, because then all this price action up here is underwater. And that, I think that is a critical level that I'm watching right now. If we lose 4100, what are possible targets for this correction? The half square at basically 3920, or if things really get going to the downside, you're talking like 3740, 3736 area. Those are possible. This is an important price level I'm watching to see, if we're actually going to get some serious weakness, and if so, then it's going to be these two levels initially for possible targets. NQs did something interesting and unexpected in my work last week. I thought we were going to get some sort of false break, which we did, made this high and then reversed sharply. And then we popped right back up above it. This is money sort of coming out of the inflation and the reflation trade and going back into tech. And that's what this represented. We did close on the lows on Friday. And we're seeing some weakness in overnight futures. So the key in the short term, I think, is going to be this level here, this 13,925 level. If we get back below that, then it's sort of the downhill becomes the preferred path. If we can test this and stay above it, then you got to call it bullish. So this 13,920 area is really important this week to see if we test it or break it. It gives us much more clarity on the path forward in the NQs.
Yeah, and also watch that trend line you got there.
Yeah, this one here. Yeah, I could actually draw it.
It's quite steep, so it definitely needs to be watched.
Yeah, you can see it here. Let's change the color so it's easier to pick up. And there you go. It's pretty much at the intersection of the square.
Exactly. That's good.
So it's a very important spot. Anybody who's long tech or interested in shorting, that's your level to watch. That's going to dictate which side the bulls or the bears are favored based on odds and being above or below that square. So that's that. Let's go to gold. Gold stalled out on a half square, which is a normal spot for it to stall on. Pretty sharp pullback that we saw. But as Barry showed you on the bigger picture on the weekly and even on the monthly, this is a daily. Gold is still bullish. And while this correction looks scary, as long as we don't take out this low and if we can put in a higher low in here, anywhere in here, it's really bullish. And if we chop around, or if we get a little more weakness and we can settle on this half square here, and maybe the timing, because I also have timing in early August based on the placement of the square. If the timing cycle comes in and we can move higher, this could be the big move. It's sort of the we're not Elliott waivers, but we do look at waves. This would be your 1. This could be the 2, and then we could be heading into a 3, which is the most powerful move in the wave structure. Anything else to add on gold, Barry?
No, I think you covered it. We looked at the weekly, we looked at the dailies, we know the levels. So we're waiting for it to sort of rest a bit. Sure. And let it. The thing is, we need markets to move to trade. So if it's consolidating, if it's resting, if it's correcting, we have to wait to let that finish up.
That's right.
Yeah.
Wait for the setup. Here's silver. The reason I wanted to show you silver, it and gold are always paired together and everyone treats them sort of as a big monolith. But look at the correction in silver compared to gold. I mean, there's gold, a lot sharper in gold. Silver has been consolidating sideways. And, when we talked, I think I showed you the monthlies on natural gas where we had a, multi-year sideways move. Silver's doing something similar. It's essentially been going sideways since August. But what's happening in this sideways that gives us clues is we have a low, we have a higher low, we have another higher low. Are we going to get another higher low here? If we do, and we can see that the low came in a good spot, it's a buy again. Because it's setting up for a move, because you got basically 8-9 months of higher lows within this correcting channel. So it's building up energy, and the clues of the direction it's going to take coming out of here are these higher lows. So silver again is on the radar to see how it performs on this pullback. If we put in another higher low, odds in your favor that the break's going to be to the upside. Anything on silver, Barry, that you wanted to add?
I think you covered it. I think you covered it pretty well.
Yeah, silver looks good. I like silver a lot long term. The other one we spoke about that I want to talk about and let you see how it's holding up in this correction is natural gas. Natural gas we talked about. I showed you the monthly had been going sideways for a long time, like 11, 12 years in a correcting channel. It's starting to break out. It actually looks like a lot of the commodities, the grains and the softs and the gold and the silver that broke out a year or two ago. This is a very similar pattern. I think natural gas looks good. I think higher prices are coming, and it's just a matter of when it can break this square up here. We tested it last week, and now we've had a little bit of a pullback. But this 330, 335 level, if we can break that, natural gas is set up for an explosive move to the upside.
Also to hold up above that 50% square.
Mm-hmm. This on the correction, right, on the pullback.
Yeah. And what's the number there? About
That's
$3.
About $3, yeah. 301, 302.
Very good.
So those are the markets I'm highlighting. We saw a lot of aggressive selling in the commodities. What Barry and I did when we saw that is we went and we looked at the higher time frames. We looked at the weeklies, we looked at the monthlies. They're all still very bullish. The daily needs to reset. That's the kind of reset we're getting. We're watching to see, do they hold important levels? If a commodity doesn't hold an important level, we put it on probation, right? Set it aside and say, okay, this thing needs to do more work, or the tide may have turned. But if it holds important levels, we continue to make higher lows. You got to be, if you want to make good money in these sorts of things and ride a big trend, you have to be willing to withstand these pullbacks, provided they hold the proper levels, provided the bullish structure is still there on higher time frames. Anything else you want to add on the move in commodities last week in general, Barry?
Well, I think it's, I've looked at all of them, and it's going through a corrective move. So let it breathe and correct, and we'll wait for it to finish up. That's basically it. Yeah.
Yeah. So this week is a week to watch. Specifically, watch the price action off of the big expiration we had on Friday. It was a quarterly expiration, so a lot of games were played with stocks based on the amount of options that were written on them, and that's all been cleaned out because they expired. So we're watching price action very closely tonight, tomorrow, Tuesday, to see what trends are developing and where the money is flowing. Still very bullish on commodities. We're very cautious and looking for opportunities and good setups to short the equity markets. Bonds are looking bullish. Crude's looking bullish. What else you got to add to that sort of look ahead, Barry?
Well, I think that's a nice summary.
Excellent. Excellent.
Well,
So
the other thing I wanted to say was, a couple of people asked, and to say that, we talk about these levels, but we also update the levels and we post them on Twitter. You post them under Ben Maldonado, and also under at Plus3 Forecast. And these are all up, we update all the levels pretty much on a daily basis. So
Sure. We try and keep intra-week. You can check our Twitter feeds and see, if any important levels are crossed or anything's changed. We try and keep updates on during the week. The Sunday show is where we sort of summarize what happened and give you what probabilities favor in our work could happen in the next coming weeks.
Exactly.
So that's it for this week. We'll talk to you all next week. Have a good trading week, and keep your head on a swivel. Things are moving.
All right. Have a good week, everybody. Thanks, Ben.
All right. Thanks, Barry.